We're going to go ahead and get started. We may have some more people straggling in. Craig Light, I'm the city engineer and city floodplain administrator for the City of Jonesboro. I'm glad to see this many people show up for this meeting today to talk about flood insurance and the changes being made. I've got a few people I want to introduce to you. Again, from the city, this is Roger Gibson. He's the assistant floodplain administrator. So we're your local support. If you have questions about if building structures are in the floodplain, you can contact our office. We'll try to help you out with that. We have Mike Boringasser here on the front. He is the state NFIP coordinator. We have two people here that sit on our stormwater management board for the city. We have Mr. Rick White back here and Jeremy sitting in the back. We have from Denton, Texas. Are you here from Denton? No, not. Where are you?
Wewoka, Oklahoma.
Wewoka, Oklahoma. Here to speak to us this afternoon about flood insurance. Now, Carl Watts.
I don't normally do formal presentations as formal as this. I'm a little bit more looser, so we'll try to relax with this thing. Again, yes, I'm Carl Watts. I spent 23 years working for FEMA. I retired. I'm also retired military, and I was out for about a year. But on the day I retired, this company started asking me if I wanted to go back to work and do stuff like this. And I held off for about a year, and then they offered me more money than I could turn down. So I said, okay, fine, as long as I can work out of my house, take off when I want to, and you don't ask any questions. And they said, we can live with that. And I turned to my wife and I said, I have another job. So that's the way it goes. What we're going to talk about today, first off, let me explain. This is the same presentation that you will get when Region 6 does the agent webinars coming up for the October 1 changes. I figured a lot of you may miss that, so I would take that same presentation and provide it to you so you had a head start of the ones that will be getting it probably next month or two when they start doing their webinars, Region 6. Region 8, which is Denver, Colorado, has already started providing this information to their agents out there. It's the webinars. Anyway, so this will be the same changes. What we're going to do is we're going to talk about some of the changes coming up in October 1st. We're going to rehash some of the changes that came out April 1st because I know there's still some confusion about those. The presentation is supposed to take about an hour. If you have a particular case that you want to talk about, let's hold off until after the presentation. If you have a general question about a slide, I'm more than willing to stop at that point, try to answer the question so that everybody gets the same answer at the same time. All right? And I'm trying to work two different things here. Okay, so what we're going to talk about is the lapse policy issue that has now come out since April 1st. Oh, and by the way, I'm going to give this presentation to the city and to the state so that they'll have it on their websites for anybody who wants to access it later on. We have a new thing about Prefirm policies for non-residential, well, Prefirm policies, period, as far as lapsing if you don't have coverage for 90 days. We're going to talk about some changes in the endorsement cancellation, specifically rules 9 and 24. There's been an update to the elevation certificate and the lowest floor guide. If you have not looked at the manual, and I'm going to stop right there. Agents, how many of you have the flood insurance manual downloaded to your desktop computer? I have 1, 2. That is your Bible. I don't care what software you were given by the company that you write for. If you do not understand what you are putting into the system, how can you be sure that you are giving the proper quote to your customer? That is your Bible. Calling me up every other day to answer a question is not the way to run your flood policies. So, two things. You need to download the manual, and you need to get on the Write Your Own Bulletin mailing list, and I'm going to provide those websites for you, to get the latest changes to the system. You may be a captured agent, and you may be getting information from your company, but are you sure you're getting all the information concerning the changes to the flood system? You can get those bulletins that go to the company, and yes, you will probably disregard about 90% of them, just delete them. But every now and then, there's going to be one that comes out that says, here's a change to the October 1 changes. We're going to do it this way instead. You need to be up to speed on that.
So those websites available for anybody or just?
Anybody can download. I recommend them to people who have trouble sleeping at night. Because that flood insurance manual, if you print it out, is about that thick. Okay? But if you have a particular question on something, you can always go to the index and look it up, and it'll tell you what section it is, whether it's in general rules, what's in the lowest floor guide, whatever the case may be. Okay? Then if you can't find it, you'll have my contact information you can call.
Carl,
Sir.
this is a good example. I had a call today from a state representative who is acting on behalf of a citizen that had 4 quotes for the same truck.
All different quotes.
Yeah, 3 quotes, sent in the policy on 1 quote, and got back a letter from FEMA that said we need another $2,400. So 4 quotes.
Yeah. Okay. We're going to talk about some of the changes in the newly mapped grandfathering and elevation rating. And I know you don't have any zones, A99 and AR zones up here, but there are communities that are getting new levies, getting levies that are recertified and stuff like that, and there's some changes to the program on that. All right. Just to refresh your memory, in the manual are all these different rate tables. You can actually go to the manual and quote the rate that your customer is being charged. Is it a pre-firm structure? Is it a post-firm structure? We provide elevation ratings all the way down to, I can't remember, it's 14 or 16 feet below base flood elevation now. It's no longer a hidden rate. Remember when you used to, if it was below the BFE, you had to submit it for rate? Don't have to do, well, you still have to submit it for rate, but the rate is in the book, in the rate tables. So it shows you, if you're at base flood elevation, it's $1 something. If you're 2 feet below, it's now $3 something. If you're 6 feet below, it's $8 per something. Goes all the way up to like $25 per $100 worth of coverage being that low below base flood elevation. We have specific rate tables for the severe repetitive loss properties and the repetitive loss. Substantial damage. Some policy that you've had on in your files for years and years is now a substantial damage structure. They've got a letter from the city that says it's substantial damage. We now have a table that says what their rate's going to go to. Got to come into compliance. Well, if they got to come into compliance, then you can say when you raise your structure up to the base flood elevation, you're going to go from here to here for your rate. This is the difference in the rates. Okay. So
that premium paid for everything compared shouldn't be different from ABC insurance company to XYZ insurance company?
This is a national.
Set by the FEMA national.
This is a national program. It doesn't matter if you live in New Orleans, New York City, Washington, D.C., Bismarck, North Dakota. If you provide the same information each time, the rate should be the same. Okay? There should be no difference. There is no competition. It's where your competition comes in is the type of service that you provide to your customer. That's going to be the competition. All right. Just to touch on determining pre-firm and post-firm. This sometimes becomes a sticky point. The pre-firm date for Jonesboro is June 15th, 1981. Any structure built prior to that date is considered Prefirm. But let's say they're coming in and buying a policy today. Never had a policy before for some reason. Somebody always owned that home for cash, but now they have a mortgage. And they're in the special flood hazard area. You had the option of quoting two different rates. One is as a Prefirm rate because it was built in 1970, or two as a PostFirm structure with an elevation certificate based on today's map. Whichever policy is cheaper is the one that you should be selling them. Yes, sir.
Might also ask what firm stands for.
Oh, am I assuming too much here? FIRM stands for Flood Insurance Rate Map. Okay, that is the map that the city can pull out and show you where that structure is and stuff like that. And these maps are all online. There is a website that you as an agent can go to, type in an address, and it will actually pull up the map. And then you have a choice of either going to the firm or in some cases to an interreactive map that shows you exactly where that structure is compared to the floodplain. Depends upon how new the maps are. I don't think the city of Jonesboro has that one yet. It's still 90, still 91? Still 91. Okay. Anybody can do that. I do it all day long. Lenders can do that to verify whether there's a mandatory purchase of flood insurance. Let's say that you go to a determination company and they come back and says that the property's in the floodplain. And here's an issue that gets between agents and lenders. Lenders, when you submit a property for determination, you provide an address to the determination company. But let's say it's got 5 acres and the stream is on the back of the 5 acres. And only the back 3 acres is in the floodplain. The structure is sitting up on the street. It's not in the floodplain. But your determination comes back and says that the property's in the floodplain. Flood insurance is required. That person then goes to an agent and says, I want to buy flood insurance. They pull a determination and the structure is not in the floodplain. They want to write them a preferred risk policy. You want a policy that shows zone A or AE. There's a conflict here. That homeowner now has to go do a letter of determination showing that the structure is not in the floodplain. When you do, as a lender, your determination, you have to specify to your determination company, is the structure in the floodplain? We could care less about the land. We don't insure land, we insure structures, okay? And this is where we usually end up having a problem. So when you guys do your determinations, tell your determination company, is the structure in the floodplain? And then you'll get a good answer back. Make sense?
And then you always have the question, the house is up by the street, but the pole barn is down in the flood zone, and they're taking a mortgage on all of it.
Actually, there is a new thing now from the regulators that says that flood insurance is only required on the main structure. Accessory structures no longer require flood insurance. So if the main structure is not in the floodplain, unless that's a real high dollar pole barn, or they keep their race horses in it, or whatever the case may be, they're probably not going to require flood insurance on it.
That's fairly new then, right?
Huh?
That's new, isn't it?
That came out last year. Yeah, I think that came out 1 April of last year, or sometime during last year time frame. Already run somebody off? All right, so anyway, just to clarify what a PostFirm and Prefirm status is, you can quote 2 or 3 policies, okay? Let's say they've had continuous coverage. They got coverage as a PostFirm structure. As long as they maintain that coverage, then they are grandfathered to that first time that they bought that policy. Okay. A lot of ifs and buts in there sometimes. All right. The object of BW 12 and HFIA Act is to get rid of the Prefirm subsidized policies. By this time, we should have not had any Prefirm policies because the communities should have done everything that they supposed to have done over the years and gotten rid of all these Prefirm structures when they flooded. We should have been down to a minimum. But Prefirm structures now account, I think it's 20%, 25% of our policy base nationwide, but over 30% of the claims paid is Prefirm policies. Okay? So Congress said, we want you to start getting rid of these in whatever form or fashion you can. So some of the changes that happened last year was businesses no longer authorize Prefirm policies. Those rates are going up 25% every year. Severe repetitive loss structures. Those rates are going up 25% every year until they reach actuarial rates. What's an actuarial rate? That's a rate based on an elevation certificate. So if you have Prefirm policies where their rates are going up 25%, it's because of that requirement. Your recommendation to your client is to go get an elevation certificate and let's figure out what your full actuarial rate is. It may not be as high as what you think it is. That rate's going to go up 25% per year until they give you an elevation certificate. There is no end in sight for them. So the first year it goes up, they need to get that EC, second year get that EC, determine what their actuarial rate is. It may be more beneficial for them to take that 25% per year until they get there. But let's say it's an elevated structure, it's a pier and beam structure. It may be elevated above the base flood elevation. And their rate may actually be cheaper than a Prefirm rate. Yes, ma'am?
So you're saying you have a house built in 1968.
Okay, Prefirm Structure.
Flood zone, and it's a rental property.
That's a business.
So therefore, the person can't really afford to own a 1968 house in a flood zone and expect to make any money off of it as a rental property.
I'm an insurance person, I can't answer that one. What has happened is the, how am I going to explain this? We have paid out more on Prefirm structures than what a lot of the structures are worth. Every community has structures that has a policy that a coat of paint on it is substantial improvement. Okay? So we couldn't say everybody who's got a Prefirm policy, their rates are going to go up. It could be your primary home. So we gave those a break this time. Eventually they will go away. But this time they just moved on the businesses and the secondary homes. If you have made sufficient funds to where you can own a cabin on the lake, that's a secondary home. You no longer get the benefits of it being a primary residence. Your rates are now higher for flood insurance for that secondary home than it is for a regular home, because it's a secondary home. So yes, being politically incorrect, I could say if you are successful, we're going to penalize you for it. But that's not the intent. It's because of the loss history and everything. But yes, with businesses, it's getting a little expensive now to have that policy as a Prefirm policy.
And the problem we have in Jonesboro, if we have these repetitive loss structures, it impacts the whole city right there. If they continue, and until those are eliminated, our rates won't go down.
No.
Is that right?
No, the rates again are nationwide. So you could have 1,000 repetitive loss structures. The rate for that individual structure is higher than a structure that is not a repetitive loss. but it does not have any bearing on the overall rate structure for the city. Okay? Now, the other two things that were established last year was the reserve fund and the fire surcharge. The reserve fund this year went up to 15% for all policies. And that's 15% of the premium, not the additional fees, which is 15% of the premium. The NFIP has never had a reserve fund. Our reserve fund was the general treasury of the United States. When we exceeded the capacity to pay our claims from the money that we had in the bank, we borrowed money from the general treasury, paid our claims, and then up until Katrina was actually able to pay those things back. We paid all our bills back throughout the years since 1968. Since Katrina, Rita, Sandy, Ike, we are now, I think, was it still $26 billion in debt or million? It's some ungodly.
23 or more. At least
Yeah.
23.
It's still some ungodly amount, and we're paying it back with interest. Okay, so for every policy is paid, a portion of that policy is going in to pay that bill. So Congress said, we want you to work just like any other insurance company. You are to establish a reserve fund. Travelers, Allstates, all those companies on their homeowners policies have set aside a certain portion of every single policy as a reserve fund so they can pay their claims without dipping into their principal. That's what this reserve fund is for. Every policy is now paying 15% of their premium as an additional fee into that reserve fund. The fire surcharge that we are now collecting, it's $25 on primary structures, $250 on all other structures. And that's every year. And we are collecting that money to pay for the extra claims from the Prefirm policies. If the Prefirm policies ever go away, so does the fire surcharge. Does anybody in here expect all Prefirm policies to ever go away? No answer needed on that one. Okay? All right, so here's what we have. As of 1 April, if you have a Prefirm policy and you let it lapse for more than 90 days, you go out and buy a flood policy from a private company. Or you just don't buy it and the lender doesn't catch it, or you have paid off your mortgage and you let it go. And now you want to go back and buy a Prefirm policy again because all of a sudden you decide you want flood insurance. Full actuarial rates based on an elevation certificate. Okay. So if that Prefirm policy ever lapses for more than 90 days, you do not get it back.
What,
Yes, sir.
now what if that property changes hands, can the new owner?
That's different.
So if they pass it on to a new family member, then that family member can get a Prefirm policy,
If they change the ownership of the house
the deed.
and you write a brand spanking new policy, yes, the new owner can get a Prefirm policy.
Making sure we're clear.
And do you want me to leave it at that?
I'm just asking.
Yeah, oh yeah. You know, I've paid off my mortgage. I had a Prefirm policy. I've sold the house now. I moved into a nursing home. Kids bought it. Yes, they can go right back to a Prefirm policy.
Okay.
Whatever the case may be. That subsidy elimination, we have a new thing called newly mapped procedures. We've also had continuous coverage from grandfathering, stuff like that. If that Prefirm policy, again, let me read it, is done away with for 90 days, they are no longer eligible to go back to Prefirm subsidized rates. They are no longer eligible for continuous grandfathering coverage. They are not eligible to be written under the newly mapped procedures. They must go with an elevation certificate. That is a big thing. What you'll find now is that somebody's going to come into your office and say, I'm up for renewal, but I have found this private flood insurance that is $500 a year cheaper, and I want to go to this private flood insurance. And it may be. They don't write it with an elevation certificate. They have basic rates for everything, and that's fine. And lenders can accept that private flood insurance. It depends upon your internal requirements. That's between you and your regulators as to whether you will accept private flood insurance or not. If they do that, and then all of a sudden find out 6 months later they don't like it because they had a flood and they got their claim and they were canceled, and now they want to come back into your office and says, I want my Prefirm policy back, they don't get it. It's been more than 90 days. So if somebody comes in, you've got to tell them this issue with the loss of that Prefirm policy. You know what, I'm going to skip that one. Well, let's just do it this way. We all know that if a policy has a 30-day grace period, gets reestablished, no loss of coverage, no waiting time. Once you pass that 30 days, then you have a 30-day waiting period. So if they don't pay that premium within 30 days, it's the 31st day, yes, you can reestablish that policy, but there's now a 30-day wait period. Once they hit that 90 days, it's full risk rates, period. Touched on this earlier, Prefirm and PostFirm rating. And I think I did it sufficiently. Some structure comes in, built in 1968, 1975, Prefirm for this city. And I've got the dates for the rest of the communities in Craighead County if you're interested. It would behoove you to do 2 quotes. One is as a Prefirm structure, and the other one is based on an elevation certificate. Which one is cheaper is the one that you should write for. Okay. On the other hand, if it's a PostFirm structure, and there was a map in existence at the time that it was built, you should still do 2 quotes. As long as they have not been declared substantially damaged or had substantial improvement, you do one based on the current map, and then one based on the map at the time of the construction. Now, surveyors, and we've got one here. If you would please pass the word, when you do an elevation certificate on an older structure, yes, all of today's information goes in section C. But if you would go to the comments section and put in there, date of construction, 1992 or 1985, whatever the case may be, wherever you're working at. Map panel at time of construction, boom, 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 boom. Map panel number, base flood elevation. That agent then can run a quote based on the map at time of construction. And whichever premium is cheaper is the one that you write the policy for. That's called grandfathering. Okay. So they may be in Zone X at the time of construction. You can write them a standard Zone X policy. Instead of writing one based on elevation where they're 2 or 3 feet below base flood elevation. So all this is service to the customer. Okay. Any questions about that? And lenders, it will now show on the policy what zone is being rated. It'll also show what is the current flood zone, and it should also have a statement that it says it's being grandfathered. So there shouldn't be any question for your portfolios. All right. Had some changes. There was a Write Your Own Bulletin that came out, and there is a website right there where you can sign up to get those Write Your Own Bulletins. NFIPIservice.com, you can sign up for them. And I need to just sort of read this here. Fire Section 13 states that flood insurance shall not be required in the case of any residential property for any structure that is part of such property but is detached from the primary residence. What we're talking about, accessory structures, and does not serve as a residence. The cancellation code, because sometimes you have one policy on a address because it has a $20,000 barn on it and they require flood insurance on it. You still use Reason Code 9. That's all that bulletin said, is that you should use Reason Code 9 for the, let me see here, for that issue.
Can you go back one just a minute? Thank you.
Okay? And that way, now the lender has to give you a letter that states we are no longer requiring flood insurance on this accessory structure. And only then can you cancel that policy, okay? Number 24, Reason Code 24. Description of this cancellation indicates that the cancel rewrite is available for the current year and one prior year, depending upon the effective date of the map of the LOMA. However, they are going to make exceptions and allow you to go back up to 5 years on that Reason Code. One of the things that's changed is that we had some Reason Codes that allowed you to go up to 6 years. Now, I understand the company didn't pay that, the NFIP paid it, but allowed that cancellation to go back 6 years. All those have been done away with. It is now no more than 5 years to go back. And then some of them have been changed from 5 years to where you can only go back 2 years. Okay, so it's just not going to be a free-for-all on the cancellation and refunds. Now, in the NFIP manual, there's now a chart in the cancellation section. Because of the reserve fund and the fire surcharge, sometimes you get those back and sometimes you don't, depending upon the cancellation code that is used to cancel and rewrite the policy. In the book itself is the table that shows you whether you can get it back or it's fully earned. There's some new changes to this coming out 1 October. So please, when you write a cancellation notice, check the table and tell your client you're only getting a premium refund. You are not getting a surcharge or reserve fund refund. That is fully earned. We get more phone calls, and we do now have an NFIP call center, by the way, in Denton. They get a lot of phone calls that says, where's my $25 or where's my $250? I canceled this policy. We go to this table and says, you don't get that back because it's fully earned. Well, I'm going to write my congressman. Go right ahead. He wrote the law. So please, when you cancel policies, refer to this chart and advise your client on what they are getting back. Any questions about this one? New picture was added to the elevation certificate. We already had one in there that showed a walkout, what people call a walkout basement, partially enclosed on the lower level, to where you just walked out and you walked out straight level, you walk down to the street, you walk down into your backyards, whatever the case may be. Question: is that a basement, or is it not a basement?
Yes.
Is it subgrade on all sides?
No.
It just has to have one side of below grade to be considered a basement.
To be a basement, you must be.
Does an appraisal work?
Well, and this is gonna be one of those disconnects then. As far as insurance is concerned, to be a basement, you must be subgrade on all sides. If you walk into a house and you take one step up into the house and you take 2 steps down into the living room, and it's a slab on grade, you might still have a basement. That's the job of the surveyor, to make sure that they walk into the house to shoot the lowest floor elevation. You cannot do an EC without having access to the house. Okay. So, we've had those where it's an elevated structure. It looks like they have a basement because they're on concrete walls, and down below is their furnace, their water heater, whatever the case may be. But when they walk out that patio door, that back door, it just walks out straight or goes downhill. That is not a basement, that's an elevated structure with a floor possibly below the base flood elevation. 2B we had to add because we have homes that when you walk out, you then take 2 or 3 steps up to get to the backyard. It is still subgrade on all sides. It is a basement and will be rated as such. Okay. So that was a change to the elevation certificate. That was also a change to the lowest floor guide that is in the manual. So any questions on what a basement is? I know, and that can be a hard thing to understand sometimes. Prefirm structures will pay for a finished basement. On a PostFirm structure, shouldn't have been a basement unless it was in an X zone. But if for some reason there was a basement, we don't pay for any damages to the basement at all. Houston, Tropical Storm Allison, 1993, I think is when that was. 93, 95, I can't remember when. Multi-million-dollar home, had a sunken living room they had just bought, and I am not lying, this is not one of those, here, hold my beer and watch this stuff kind of story. They had just bought their daughter a baby grand piano for piano lessons. Had it in the living room. Tropical Storm Allison hit. The piano got damaged. It was in the sunken living room. We did not pay for it under contents because it was a basement in a PostFirm structure. They were not happy. Okay, map changes. Hopefully, one of these days, there'll be a map for Craighead County. And things are going to change. So let's talk about, here's just some of these map changes here that's going to happen. We are going to have some people that are going to go from a low-risk area into a high-risk area. Okay? And that lender, that mean old lender, is going to send them a notice that says, you've got to now have flood insurance. So what do? You look at it. Can they be grandfathered to the Zone X? What was the date of construction? Would it be cheaper for them to get an elevation certificate and buy a policy based on the new map? We now have a new section in the manual called newly mapped. And what that says is if you are in Zone X and you get newly mapped into a floodplain, if you buy that policy prior to the effective date of the map, you can be written a preferred risk policy, and you can renew it one time as a preferred risk policy. And then when you renew the second time, it'll be a standard Zone X policy, but at a cheaper rate for a while, because it'll go up a little bit every year. This is to stop those complaints. Well, I'm now in a floodplain and I went from no flood insurance to having to pay $2,000 a year. Okay? So, that's one of the things that you can do. You can write that preferred risk policy. It's going to get renewed as a preferred risk, and then it's going to go to standard X. If they wait till after the effective date of the map, you write them a preferred risk policy for 1 year. They then go to the standard X zone with the increases every year until they get full actuarial rates at Zone X. Yes.
Okay, the city of, the Craighead County was told 2 years ago that there would be a new map between 18 months to 2 years from now. So it's been 2 years, and there's still no map. So if you're wanting to write a policy
You
for
have to
some of
use
the
the current
areas
map.
that may become, how are you gonna know the effective date of the map?
Well,
If you've got to get it written before the effective date, we're already past due for a new map.
how am I going to explain this? FEMA has a way of overselling the timeframes sometimes. And then they get into politics with local communities that delays the issuance of maps. What we're talking about here is when that final determination letter comes out that says your map is going to be issued on such and such a date. And the city gets one of these. And what that letter says is you have 6 months to update your ordinance with the effective date of the new map, and here's that effective date of that new map. Here are all the letters of map changes that have been incorporated into the new map. Here's the letter of map changes that are being recertified, because we can do it because nothing has changed in that area. Or here's are the letters of map changes that are no longer recertified and are no longer good.
So you're talking about FOMA and FOMR, those things.
Those things, the LOMAs, LOMARs, and yes, all those things. So until that letter comes out, you cannot write one of these policies because there is no information yet. But until you get that, once you get that letter, you got 6 months to get your clients in and get that policy written.
So a person would have to be watching the news or reading the newspaper?
No, the city, because they're in CRS, are going to notify everybody as part of their outreach program. And I'm not really being facetious. That is part of the process. What will also happen too is FEMA will come up here and hold a public meeting. We'll hold another meeting for the agents, and we'll also hold a public meeting for people to come in. They'll have computers set up. They'll pull up their address. They'll say, this is what the zone was as of yesterday. This is what the zone's going to be once the new map comes out. So we'll be holding community meetings for that. But as far as the date of when that map's going to come out, the only thing I can do is refer you to the state and refer you to FEMA. And I don't know who the floodplain administrator is, if FEMA is, or who the engineer is for Arkansas.
Bordeaux.
Who?
Bordeaux.
John Bordeaux? I would say, as an organization of agents in the city of Jonesboro, Craighead County, I would say I would get with your local elected officials, and they need to be calling FEMA and speaking to the engineer that has control of those maps. Find out what's going on. That's about the best answer I can give you on that. Am I running over? No, I still got 15 minutes. Okay. Let's change that. You're changing high-risk areas. You aren't going to have to worry about that here. You're all in Zone A. So I'm going to skip that one. Let's change the base flood elevation. You're in a base flood elevation, and now you're going to have that change to either higher or lower base flood elevation. If you already have a policy, you are grandfathered under continuous coverage to your current policy. Your rates will continually go up every year, just like they do every year. But there isn't going to be any big jump because now instead of being 1 foot above the BFE, you're 3 feet below. It doesn't make any difference. As long as you keep continuous coverage, that policy is grandfathered to how it was initially written. Again, if you are writing a new policy based on the new map, based on the old map, and again, that's going to be the grandfather as long as it was built in compliance. Let's say that the structure was built in non-compliance when it was built in the floodplain. you do not get grandfathered to the map at time of construction. You are based on the current map when you buy that policy. Okay? Let's say you're removed from the high-risk area and you go back to a zone X. The questions that you need to ask your client is, how close are you now to the floodplain, the special flood hazard area? And are you really no longer at risk? Just because you're in zone X does not mean that you are not going to flood. I was told about some properties here that during the last big rain, never flooded before. Levees were overtopped, or whatever the levees appear to be around here were overtopped. The ditches, I think is what you're saying. The ditches were overtopped, and houses that never flooded before got water in them. Just because if you look at the map doesn't say Zone X will never flood. It says Zone X, area of minimal flooding, usually less than 1 foot. Okay, so we're all in a floodplain. Yes,
Well, I was just gonna make a point, kind of tying into that, I think one thing that a lot of people need to realize is that this used to be a swamp. So, because it hasn't flooded in 30 or 40 or 50 or 60 years, doesn't mean that it won't.
that's correct.
This used to all be underwater until it was drained, so.
And you have a 100-year floodplain and a 500-year floodplain, too, right?
You have a 1% chance floodplain and a 0.2% chance floodplain. We are trying to change that culture of saying 100-year and 500-year, because people say, well, my family's owned it for 120 years and it's never flooded, so I guess the maps are wrong. Or we had one 5 years ago, I guess I'm good for the next 95 years. City of Arlington, Texas had 3 of them in 4 months, 1 year. And, Tropical Storm Allison, City of Houston. Tropical Storm Allison sat over the northeast corner of Harris County. Very few very few special flood hazard areas were mapped in the northeast corner of Harris County and Houston. But that's where all the flooding took place. So, just because you live on a mountain, unless you live on the exact top of that mountain or hill, you are subject to flooding. Okay? Now, this thing here is, one of these things here is that you can show them that you can write a cheaper policy, change it to a PRP if they meet the loss history, get them a refund, they keep a policy, you look like a hero. But again, if they want to cancel that policy, they're going to have a letter from their lender saying that they can cancel a policy. The lender, in any of these cases, the lender has to provide that release letter so that they can cancel that policy totally. Okay? All right, no change. This is the opportunity that you have to review those portfolios that you have on your clients. Are they still fully insured? Are they insured to replacement cost? They bought a policy, said their structure is worth $100,000. Over the years, it's gone up. They've never taken option B. Is it option B? On the renewal forms, it's always stayed the same. Never increased the coverage, and now they're only covered till 70% of the value of their structure. They get a flood that's actual cash value. That is not replacement cost anymore. So they get a flood, they get $40,000 for the damage, they may only get $20,000. Okay? It's an opportunity when new maps come out to look at all your policies to make sure that they're all good. All right, you know what? I'm not going to talk about that one. Let's just go over it again.
Be careful.
This newly mapped thing, as I tried to explain, you can write it as a PRP. So this is an example here. And the PRP has gone up because of the service charge and the fire service charge and the reserve fund, so it has gone up. So you buy it prior to the map, you're gonna pay $519 a year, give or take. If you wait until after the map goes into effect, you may pay $519 a year, but on the second year, it's gonna go up to $585, to where that person that bought it prior to the map is still gonna pay the PRP price for their first renewal. Okay? And then it's gonna go to the standard X-zone rate. And yes, standard X-zone policies have jumped tremendously. They used to be fairly cheap. And I have now seen standard X-zone policies at $1,700 a year, just because of the amount of coverage that they're getting. Okay. So whatever you can do to make sure that they stay low is the best. I don't know if you write policies throughout the state, if you go getting down around Little Rock, I think, where we have some levees and some other counties. There's going to be some changes to that once the levy reaches a certain point, you're going to be able to write a PRP policy instead of having it as a, based on elevation, based on the current map. So a lot of things are changing about that one.
Carl?
Sir?
One thing, the preferred risk policies, they have both contents and building coverage, right?
Yes.
So if you go eventually to the standard X, you gotta make sure you have both those in order to get the contents covered. Two separate
That
policies.
is correct. That is correct.
And that's a big problem we have with people who have building coverage, but they don't have contents.
They don't have
coverage.
contents.
Often in the flood, that's where most of the damage occurs.
If you are advising your clients and they say, yes, fine, I've heard all this, I will never flood, pull out your refusal letter, have them sign it that says that you have advised them of the flood insurance and the availability of flood insurance, but they have refused it, have them sign it and date it. So when they come in and say, you never told me about flood insurance and now I've flooded, you go to their file, you pull out, says, yes, on October 2nd, 2016, I told you about flood insurance and you turned it down.
Question.
Sir?
Is there a form that you guys present to us, or does our company have that, or do we write that letter out of our own agency?
Your company should have one if you are a captured agent. If not, I'm going to give you all my email address. I can scan that and send it to you.
Because I don't want to know gang that, hey, that form's not legal.
There's no form number on it from us.
Okay.
It is just like a letter that you can put your letterhead, your agency letterhead on it. And, but it's a standard format. All right, there's some training available. As that first statement says, there is no classroom seminars, which means there's basically no CEUs anymore. But they are, I believe, and I'm not involved in it, there may still be CEUs available through EMI. That is the FEMA Training Center. They've got all their classes online now for agents. There's actually about 10 of them, all the way from basic policy writing to elevation certificate. There's classes on there for surveyors and engineers and floodplain administrators. If they ever feel they need a refresher course, you can take the time. But that's where you sign up for it. The floodsmart.gov, if you do not use floodsmart.gov, I would highly recommend that you become one of their agents of record. You can sign up, you can have your agency listed on that website. It's where people will type in their address, tells them if they're in a high risk to a low or medium risk flood zone, and then it provides a list of agents that sell flood insurance. That's within a driving distance or a crawling distance of them. So you can get your name listed as an agency on that website. They also, at one time, provided subsidies for advertisement under FloodSmart. I don't know if they still do or not. These are some of the classes that are at, so you can go to independent.study at fema.dhs.gov and sign up for these. I'm sorry, that's the email address. That's the website there. Okay. Wait a minute, where am I at here? There it is. That's the one I was looking for. There's the website where you can sign up. As I said, I'll give this presentation to the city. Earlier I mentioned the Write Your Own Bulletins. That is NFIP iServices website right there that you can access. Anybody can access it. And you can go in and sign up for bulletins. You can go pull up bulletins and the manual. You can pull up bulletins by year. You can also access training. Some of this stuff is going to be password protected. It's usually for the Write Your Own company. But there's a whole lot of information on there. And it even has information up there, if you notice, in the right-hand corner about the FIRE Act. There is still a flood conference every year. It is now put on by the Write Your Own Association, if I'm not mistaken, to where you can go. It's about 3 or 4 days. There's seminars. You get, there's people who get Agent of the Year, or Outreach, Independent Agent of the Year, that kind of stuff. But that would also be good. Flood Insurance Manual, you can download it there, either FEMA.gov or iService. Let's just through this one. Today's the day before the next flood, prepare for tomorrow. And here's the contacts. Mark Lujan is the person at the FEMA regional office. He is the senior insurance specialist. He's my go-to person when I need a policy decision or what does headquarters really mean. That is the person that I go to. And if you can't get a hold of me or my coworker, that's the person you need to call. Tom Kostelski is the regional manager for Region 6. That's all that area down there. That's his telephone number and his email address, and this is mine. That's the only number I have. I do not even carry a cell phone anymore. So when I'm out of the office, I'm out of the office. Okay? The best thing that you can do if you really want to get a hold of me is send me an email message. I usually respond to those wherever I'm at. Okay? And I believe, I'll leave that up, but I believe that's the last one. All right, questions, more questions.
I mean, history of bankers, so from every flood insurance and requirements and all of that kind of stuff, but as a real estate agent, and some newer real estate agents, they never heard of loaners or loaners. Should an agent, I'm gonna say that we probably shouldn't take a position on this. We need to refer them to a licensed insurance agent. But how do you go about anymore getting getting the elevation study and getting a loaner to get that out of the flood zone?
That man right there, surveyor. He'll be more than happy to hand out cards for all the business he can get.
And so I think when I was in banking, that's what we used to do, and they would take the step, but years ago, they'd get the information to me, and I would send it down to Texas.
Okay. You can get a letter of map change through several methods now. All of them require an elevation certificate by a surveyor or engineer or architect, whatever state law allows. Okay? If it's an older home, it's going to require an elevation certificate. If it's a PostFirm structure, the city may have that elevation certificate on file. Seeing as how the map hasn't changed since '91, that elevation certificate is probably more than likely current. Okay? You take that, the homeowner can submit it online, the surveyor can submit it through their online system, or you can mail it in. Now, you're going to have to provide a legal description, probably a plat map and a copy of the firm. I think that's all that's required anymore, I'm not sure. But if you'll go to FEMA.gov, in the search engine, type in LOMC, it brings up all the pages, 4 letters of map changes, and it gives you the instructions and the downloads. Now, there is one, and again, the lenders now, if you get one where the lender says, we want flood insurance, but if you look at the map, the structure itself is outside the boundary of the floodplain. There's a process called letter of map amendment dash out as shown. No elevation certificate is required. But what you have to provide is a digital map showing the location of the structure and the floodplain. Do you guys use GIS? So if you've got your base map of your satellite imagery and you've overlaid it with the floodplain, if the homeowner goes down to the city and says, I need a GIS product, they can pull up that address. I'm probably telling lies out of my face now, right? Okay. And overlay with the floodplain, and it would show that the structure is not in the special flood hazard area. 2 ways of doing this now. One, that homeowner can go back to that lender and say, I have this product that shows my structure is not in the floodplain. Please give this to your determination company and give me a new determination. And it may come back and say, okay, structure's not in the floodplain. Or with things like Bank of America, who's the other one? Wells Fargo. Wells Fargo is real notorious. They won't accept that. They're going to want something from FEMA. You then submit that under the letter of map amendment out as shown. And FEMA then comes back and says, from the information we received, this structure is not in the floodplain. And then they can submit that to the lender and say, you know, I don't want to pay flood insurance. Or you can write a PRP policy at that point.
Because we used to have all the multitude of maps that we would go on and we would look at, and then we outsource that to an independent firm that does that. But a lot of people don't understand that map, as I understand it, is painted with a broad brush. And it's not that detailed, the 91 map. But it's conceivable that you're in a flood zone, but you're on a mound. And that's not going to show on the flood map. And that's why the elevation certificate's important.
Yes. What topo was the 91 map put on? 10-foot contours?
Yes.
Okay. The contours themselves are 10 feet apart. That means that that line can move 5 feet either way. Okay. And yes, we may do a cross section here, go a mile upstream, do a cross section here, take that 10-foot contour map and follow this line, when it really, instead of going this way, it should actually go this way because of the inconsistencies in the ground elevation, yes. And that's why that process came out. The newer the map, the more detailed they get.
I would think that satellite imagery with the topography is better now than it was in 91.
Depending upon how much money we get and what can be supplied to us, the best we can get is 2-foot contours. But that's a hell of a lot better than 10 feet. And yes, boundaries do change. In fact, a community, not just Jonesboro, but any community can take a current study and have it reapplied to a new digital topo map and have the boundaries change. Base flood elevations don't change. Where the studies themselves don't change, but the boundary of that floodplain will change based on the elevation.
Other question, do they still have non-participating communities?
Oh, yes. In the state of Arkansas, we have 92 non-participating communities that have been mapped and have decided that they did not want to take the effort to join the program.
Green County once upon a time was non-participating.
In Craighead County, the city of Monette is not participating.
And so how does a lender loan money on the structure over there and non-participating?
They have to keep that loan in-house. It has to be a conventional loan, I think is the term. They have to write it as a conventional. They cannot sell it to FHA, can't sell it to in a large portfolio or anything. They have to keep it in-house. So, but everybody else in Craighead County participates.
The Truman has a newer map. They are participating now.
Ooh.
They did Truman, Arkansas, and Poinsett County. They did not, they were not participating. There was no map.
Now,
There is
just
a map now.
City of Truman, City of Truman. Sounds like a movie to me. Truman, City of Truman. Their map is dated February 4th, 2011. They have minimal flooding, but they came in 79. They've been participating since 1979.
What about Paragould and Greene County?
Paragould, I think, is participating, are they not?
Yeah.
Are you saying any property in Monette has to be purchased under a conventional loan? Because they don't participate?
No, Monette has a map, but it says all zones C or X. Their map is dated 91. But they are not participating because there is no special flood hazard area in the city limits. So there is not going to be any requirement for flood insurance from the lender. But if somebody wanted to buy flood insurance, they could. Paragould? Paragould. P-A-R-A.
I was thinking Paragould was, but I thought Greene County was.
Greene County.
Green County, what you're saying.
It does now.
Paragould has been in since 78. They have a new map dated 05/16/13. Greene County is in. They have a map dated 5/16/13. They came in of 7/20/11. So they're in.
And that information would be on this website?
Okay, you can go to, it's called Community Status Book. If you'll go to FEMA.gov, type in Community Status Book, it'll pull up this form right here.
Or you just put in CSB.
CFB too?
And it'll take, CSB will take it.
CSB. Yeah, CSB. In the city of Jonesboro, we have 763 policies. We collect $601,278 a year. We have $128,827,800 in coverage. We've had 184 losses in just the city of Jonesboro since 1978. And we have paid out just a hair over $4 million. Okay. Now, you all realize that when a flood occurs, the city has the responsibility of making a determination as to whether that structure is substantially damaged or not. The problem is some cities or counties wait until the person comes in for a permit. If they don't come in for a permit, they never know that they got flooded unless the community drives around. If a structure is substantially damaged, it must be brought into compliance with the current map. ICC, increased cost of compliance, comes into play with that then. In that they will get a letter from the city that says you've been declared substantially damaged by flood. They need to come back to you as their agent or call their company directly, whatever the case would be, and say that they need to file an ICC claim to do a mitigation project to either totally demolish the structure, move the structure, or elevate the structure. If it's a business, they can flood-proof the structure. But that's something that needs to be decided between them and the city, but there's going to be another claim filed for increased cost of compliance. That's up to $30,000 or the maximum amount of coverage available, which is $250,000.
So that is in addition to
That's in addition to the claim. Let's say you have a $200,000 policy. You get flooded, the cost of repairs is $160,000. The city's probably going to say you're substantially damaged. And substantial damage is where the cost of repair is 50% or greater of the market value of that structure. Most communities start off using the appraised value because that's a standard figure that they have. But the homeowner always has the option of getting a pre-disaster market value and going back to the city and saying, this is the actual true value of my structure. So it's 50% of the market value. So you got a $200,000 policy, your structure's probably worth pretty close to $200,000, $210,000, $230,000. You got a claim paid for $160,000. You are probably substantially damaged. You were built slab on grade. There's a base flood elevation there now that says that the water's going to be 2 feet above the ground. You have to raise that structure a minimum of 2 feet to be able to rebuild it, according to the city. Do you have a 1 foot freeboard here? Okay, so it's going to be 3 feet, 1 foot above that base flood elevation. They then come to you and says, I need some additional funds. It's a flood claim. Well, there isn't any more, but you can give them ICC. That's another claim, and they'll have to jump through some hoops and provide estimates and stuff like that. They may also be part of an HMG pre-project, hazard mitigation grant. Or if they're a repetitive loss structure, there's some other funds available. But they're going to have to bring the structure into compliance.
On the example you're giving there, we're talking about a $200,000 house.
Okay.
We've got $30,000 approximately that we can get an ICC to raise this house 3
It
feet.
is not going to be enough.
Okay, that was kind of.
I will tell you that right now. It is not going to be enough. But if it's a presidentially declared disaster, SBA is part of the response from the federal government. SBA normally, will always send out a package to anybody that applies for disaster assistance. That is part of the process. Everybody has got to fill out that SBA package whether you have any intent of getting those funds or not. If you decide to get them, what SBA does is they, most of the time, is take your current mortgage, pay it off, roll it into your SBA loan, and then give you, I think it's 15% more for mitigation to bring your structure into compliance. And then when you get your insurance proceeds, you either pay them back or you make the repairs on your house and not get as much money from SBA. It all works out. Most people end up with an SBA loan.
We did one ICC claim after this May 24th event. Structure was worth 60,000-ish, damages were 42. They got 42, big money, and got the ICC to tear the structure down.
Demolish it.
Yeah. They're starting to.
And my hour is up. You are staying now under your own violation and your own emphases here and stuff like that. So, any other questions?
Good.